9 home buying mistakes that hurt your wallet. And this video was inspired by a Yahoo Finance article that I came across called A Certain Amount of Dumb Home Buying Mistakes That Hurt Your Wallet. So if you see the word dumb in the title, that's where it came from. Of course, I'm not calling you dumb, but I think the things in this list will help you in some way, shape, form, fashion. What up? You got Mr. Smith, 0.5 of Mr. and Mrs. Smith. And in this brief video, I want to talk about mistakes that you can avoid as it relates to you buying a home. And if you've already bought a home and you're watching this video, then it's something that can help you going forward, and or someone else that you know, so they can avoid some of the mistakes that were made. In fact, we actually made at least one of these mistakes in terms of when we bought our home. So we're not naive to the fact that we are able to make errors. Even if we know a little something, there's some things that we can skip over if we don't know everything that goes along with the process. And I actually got a little tablet because I didn't want to leave off these 9. It was 9 that I extracted that I felt would be very beneficial, and I want to give it to you in a specific order. So I got these written down, and then I'll elaborate. Mistake number 1 is ignoring your credit. Now, if you're following us and this is not your first time watching our video, then you know we drop a ton of credit education. We got a free credit class you can get access to, a free credit master class, and a 5-day credit challenge that you can tap into. We also have a DIY platform that you can invest in and learn it. We also do credit for clients, so if you're looking to hire someone to help you in that process, then set up a free consultation and we'll see if we're a good fit for you and if we can help you take your credit to the next level. But a lot of people ignore their credit, and that's the bad thing to do. Why? Because credit has the ability to lower how much you pay for your home. Interest rate is still something that should be factored in to the cost of your home. Yes, you may be able to qualify for the home, but just because you can qualify doesn't mean that you should qualify if you can get your score up a little bit higher in a relative time that makes sense for you. So a lot of people ignore their credit and just jump in, or they settle for the bare minimum versus seeing if they can do a little bit more in order to heighten their score. That being said, ignoring it or settling is not a good deal. That's mistake number 1. Now, of course, you'll get certain people, certain companies, certain realtors that try to nudge you. Yeah, we can get you approved because they're trying to hurry up and get the sale. I get it. But I want you to be more informed and understand that just because somebody can get you approved doesn't mean they necessarily have your best interest at heart. Number 2 is thinking with your heart instead of your head. So head over heart. A lot of times people get emotionally attached to something, like they literally, the blood starts rushing, and you know, they start to get the flutters, they get a little nervous, and they just really want to buy because of the emotional attachment to it. And this is a funny thing. Me and my wife, we just recently bought a fridge, and she said this before we actually made the purchase, because you know, we went somewhere that had some great looking fridges. It was time for us to upgrade the fridge, and they were like, she was like, should we get it, Marcus? Should we get it? You know, I know you always say that I make emotional decisions, because I've said that before, because I know she gets emotionally attached to certain things more than I do. And in this case, I was like, nah, that makes sense. Let's do it. And we actually bought the fridge, but she does understand that she can get emotionally attached to certain things. So she consulted with me, and it was all good. Plus, you know, happy wife, happy life. She's the queen, and the kitchen is definitely her domain in terms of who spends the most time in it, because she's something like a chef. The girl just loves to cook. I love it when she cooks. And the fridge plays a part of that. And the fact that it's a good looking fridge, then that makes it that much better. But the same is applicable when buying a home. You can walk into a home and feel like, oh, this is the one. And you're willing to stretch yourself because you're thinking with your heart versus your head. Now, I'm not here to say that you should limit yourself, because a lot of times stretching yourself push you in a position where you have to figure it out. But that's certain people. So if you know your capabilities to where you feel like you can elevate to match whatever it is that you put yourself in, great. But some people, you mess around and put yourself in a predicament, and then you end up foreclosing on the home, or you have to get out of the home due to the fact that you thought with your heart versus with your head. So stay away from that. That's another mistake. Number 3 is overlooking all expenses involved. A lot of times we see the overall amount. Okay, this house costs $200,000. This house costs $100,000, $150,000, $500,000, $1 million, whatever it is that you feel you can stomach. But you forget about the other costs associated with it, such as the insurances, such as any updates that may need to take place, such as certain taxes that go along with it. Do you live in an area that has different neighborhood association fees that you have to pay? Think about those things And that way you can factor in the overall cost versus what they say it'll cost you on a monthly basis. Sometimes they may say, yeah, based on this loan, you'll possibly be paying $600 a month, and then you get all in and you're like, yeah, $600 a month, but I also got to pay for these taxes, I also got to pay for this insurance, I also got to pay for my escrow to make sure that it covers it all bundled up, which is, you know, my preferred way to go about it. But you got to factor in everything and not just the base that they tell you, because there's usually some other fees involved. So consider that as you consider your capabilities, because the last thing you want to do is be a slave to your home. Many people follow the golden dream of going to school, getting a good job, and when they get into their homes, or when they get a job, they get a home. When they get a home, they think emotionally and don't factor in all of the costs associated with it, and they buy more home than they should. And a lot of times that makes them get locked into working their job, because they're like, you know, if I can't leave this place because I just bought this home, I got a big purchase under my belt. And a lot of times that keeps them at their job, and then when they get a raise at their job, they want to upgrade their home. So now they're keeping up with the Joneses, and they never really benefit from the fact that they actually got an increase, because they put themselves in a predicament by not factoring in all the costs that's associated with it. I know I went on a little extra on that, but hopefully that's important for you. Number 4, thinking short term. You got to understand that a home can be a long term investment, even if you don't plan on staying in it through the full terms of the loan itself, whether you got a 30-year or 15-year, it can be a long term investment. For us, we understood that even though this is not our end all be all home, we know that we can use this and flip it in some way, shape, form, fashion, whether it's an equity standpoint, because sometimes homes go up in value. We actually bought our home with some equity built into it, which is, you know, something I hit on later. But we bought it with some equity into it. That's great, but not all homes appreciate in value. Not all the time does the equity go up. Sometimes it may feel like it does, but when you factor in all of the money that you spent more than what it is actually worth. So you got to understand, as it relates to you doing that, then you mess around and put yourself in another predicament just because you were thinking short term. Now, if you're thinking long term, then you look at it from a standpoint of, okay, does this area have growth potential? That was something we looked at. We're like, okay, they're building in our area. Buildings in our city is looking a lot different than it would have. I'm like, it's only one place that they have to head, and that's in our direction. In our city, most of it is flat. It's not a lot of areas that have views. Our area sits on a hill. It has a view from our upstairs level, and the area across the street have views. So people may be making their way here. They have a recent school that got converted and merged into, it was just a tech school, but it got incorporated into a university. So it's a lot of potential in this area that we saw and was like, you know what? This house just sold across the street from us. We were renting. Let's go ahead and buy. So think long term and see if you feel that your area has potential for growth. That's important, because a lot of times people just buy the home just because, oh, this is a nice neighborhood, and you're on the tail end of the deal, so you position yourself to not get any equity. But if it's a lot of growth that's yet to come and you hopped in on the front end, then you can benefit from that. So think long term. Don't be emotionally attached. Think long term, and that can help you tremendously. Number 5, I'm going to throw 2 in here. It could have been 10, but I'm going to throw these 2 in here. A lot of times people forget about the appraisal. And that's basically seeing what the house is worth. Now, a lot of times, I will be honest, appraisers do some shady stuff as it relates to determining how much a house is worth. And a lot of times the appraisal is based on the comps of the area, basically the most recent sales. But a lot of times they look at it and appraisal for a certain amount. The main thing the banks care about is it worth what I'm about to lend? They don't care if it's $1,000 more than what they're about to lend the person. However, sometimes those appraisers are in cahoots with these banks and they're undervalue it as well. That's a whole nother conversation. Sometimes these appraisers will come in and appraise it for less because of some racial things. I've seen a video, and this, you know, was disheartening, which is crazy, that it was a queen. It was a biracial relationship, a black queen with a white guy, and basically, because her pictures was in there, they valued the home as $100,000 less as it relates to appraisals. Now I'm going off in a tangent, but you do want to get your appraisal. But I will make note that sometimes they devalue the property based on certain things if they got some type of bias. But it was viewed as $100,000 less, which is crazy to me, and I they got a problem with her being in there. So the minute she took her pictures down as if she didn't live there, the appraisal shot up through the roof. So it was like the house was worth less because she was in it, which is insane to me. Because whether you know it or not, the Black Queen is the originator of life. So to devalue it based on the goddess being in there, you just shot yourself from a universal standpoint. So understand that before you try to play with fire. If you know an appraiser, or if you had a perspective, because you got to understand, you mess with the universe when you mess with the black, and when you mess with the Black Queen, you mess with the universe as well, which is messing with God and hurting your own karma. Whole nother conversation. But do not skip out on the appraisals and the inspection. And this is something that we forgot, but we have been living in it for a certain amount of years, but we should have gone through the inspection. For whatever reason, I was thinking it was an all-in-one. That was just my ignorance that led to that. But forgetting the inspection was a bad thing, because we possibly could have got it for lower. Because had they done the inspection, looked at this, look at that, look at that, I could have said, hey, we got to put this amount in it. Can we get it for this amount? Because that way we help ourselves, but we also can possibly get some stuff fixed prior to moving in it, and it makes it a win-win scenario. So don't forget about the inspection, because the inspection could actually save you money. And sometimes a person can go and not do the inspection, but what happens is this: you don't do the inspection, and now you're in it, and things happen, and you're like, oh, it's going to cost me more than I can afford right now because I didn't do the inspection. So be careful of that. It's a good thing that we bought a house with some equity. People are actually wanting to buy it now just because of certain things. So pay attention to everything that we're listing, because they all go hand in hand. Number 6. I believe we're at number 6. Number 6 is money mistakes before closing. So a lot of times people see that they're getting approved for a certain amount, and they want to go make a big purchase. They want to go buy a boat, a car, and the bank sees this and they're like, hold on now, we need to make sure we're still going to be able to get you the money and make sure you're going to be able to still afford it. But if you make this big purchase, now that jeopardizes your cash flow. Your debt to income ratio just shifted because of this big purchase. So be mindful of that, not making huge purchases before the deal is done, and just in general. But just wanted to point that out. Number 7, getting into the wrong mortgage. A lot of times you got to weigh out your options. There's a lot of different types of mortgages. I say a lot, but quite a few different types of mortgages. You want to consider which one may be best for you based on whatever circumstances, and getting the one that's right for you. I won't get into that in this video, but make sure you weigh it out and see which mortgage is more likely good for you. Another thing is going with the first lender. So that's number 8. A lot of times we talk to one lender and they give us something and we feel like, that's a good deal because they smiled at us, or they gave us some candy, or they gave us a sucker. But you got to understand that you don't want to be a sucker and get suckered into just talking into the first lender. Now, I will say this. We did do that with the first lender. The flip side is we sought them out. After understanding a couple of things, seeing something else that happened, we sought them out versus us being sought out and then just accepted what they had to give us. So I think we did pretty good based on my further knowledge later. But, we probably could have did better. Who knows? But that is another thing. So I told you, one of 2 things was going to apply directly to us as well. And then last but not least, borrowing too much money. A lot of times we buy into a house because the market is climbing and everybody's buying houses. Well, you bought a house in a high versus waiting to where when not many people were buying it, you could have got a better deal on it. So you borrowed too much money in that sense. Another thing is borrowing too much money because you got more home than you could actually afford. You want to make sure that your mortgage or your monthly payment is going to be 1/3 of your overall income or less. That's just a good rule of thumb because it gives you more cushion so you're not strapped to your home. You can feel like, okay, bare minimum. If all else fail, I'm going to be able to at least cover my mortgage. So that's power in that, and that's one of the things that we pride ourselves in, getting something that was very low in cost, but something that we feel like we can use to leverage and still get equity out of based on the things that are happening around us. So we were able to not take out too much of a mortgage and actually position ourselves to have more freedom and be able to get some equity and turn this into an asset or wealth building pillar that goes into our future and the goals that we have. So hopefully one of those 9 have benefited you. The video was a little longer than I wanted, but nonetheless, hopefully you got some value out of that. Share this with somebody else who you feel may benefit. Let me know what you think about any of the specifics that I went over. That's all I got for this video. Mr. Smith signing out. Salute.